Hello, everybody, and welcome to our webinar on Conduit Capital. It's awesome to have everyone in the house. Can't think of anything better to do than to round off my Monday with some chats with some CEOs. It's going to be awesome. So joining me today, I've got a couple of people. First of all, my sidekick, my partner in crime, and our content guru, Kalo Mabedzi. He's joining us on the call today. And then I've got some awesome CEOs in the house. Like I mentioned, we've got the Conduit Capital CEO, Sean Riskowitz, and the Constantia Insurance CEO, Peter Todd, joining us on the call. Welcome, guys.
Thank you, Carly. It's great to be here.
Awesome. So a bunch of you guys in the audience are invested in this company already, and you're hearing lots more about it today. Some of you are new and you're sussing it out. Both are awesome. And guys, we welcome questions throughout the webinar today. How you can ask your question is just to go to the Q&A tab at the bottom of the screen and post your question there. And once we get to the end of the webinar, we'll take a look at those questions and we'll ask them to the floor. So yeah, you can just use that for your questions throughout as we're chatting. Cool, so let's get things started. I am a sucker for stories. If you know me, I am a sucker for stories. I love hearing about the journey that someone's taken or something is taken. So Peter and Sean, I really want to hear from you about how this company even came about. When did it start? What was the thinking behind it? And what is kind of your passion and purpose with this company?
Thanks, Carly, and thanks EasyEquities team for having us today, and thanks everybody for dialing in. Hopefully we can make it a useful and worthwhile experience for you. So Carly, to answer your question, let me answer the question by just explaining the structure of Conduit quickly, and then I'll tell you my story, no problem. So Conduit is a JSE listed investment holding company, which has as its biggest investment the Constantia Insurance Group, of which Peter is the CEO. And Peter's going to tell you a little bit more about Constantia. But Conduit's been a listed company for quite some time. But it was only in 2006 when they bought the business of Constantia that they became an insurance company. And so I was an investor running a fund, and I came across Conduit in 2010, which was at the back end of the financial crisis. And I saw that it was a very high quality insurance company that was trading at a very low price. And I looked into the situation and I thought, wow, this is quite an attractive opportunity for somebody who wants to be an investor in the company. But I also looked at it from the perspective of recognizing that it had the platform to grow into a South African success story in the insurance field, because it was a company that had access to all kinds of different lines of insurance. It had the potential, if you invested in it and brought in the right people and brought in the right systems, that it could grow substantially. And then so in 2015, we took a very active involvement in the company, and it resulted in us reinvesting in the group so that our premiums grew from about 700 million in 2015 to about 2 billion in 2021. We should be about 2 billion in 2022 too. So we've grown quite significantly, but the opportunity we saw was kind of twofold. We saw an opportunity to build a successful South African diversified insurance business in areas where we have very strong competitive advantages. And we saw an opportunity to provide insurance solutions to the people of South Africa and across about 18 countries in Africa, using a platform that was dynamic and opportunistic and exciting. And so I said, as the CEO of Conduit, hopefully enabling the growth of the insurance business that's run by Peter. So that's kind of the story behind why I got involved, why I see an opportunity, and why we spent the last 12 or 13 years working at it.
Right, awesome. Peter, do you want to add anything to that?
Thanks, Carly. Yeah, Sean's got it slightly wrong, because the business grew to over 2 billion by 2019. So from the 700 million in 2015 to just over the 2 billion in 2019. That's an important metric because in 2020, I joined as CEO in February of 2020. And that really was a start of a period where, the business, having come off, exceptional growth, hadn't invested enough in terms of the systems, processes, and people as well to kind of manage that growth in a responsible way. So that had caused some pains in the business. I came in then in February of 2020 to, I guess, set it onto a new course. So that meant for, a couple of years, we actually kept our revenues relatively stable at those sort of levels while we set about fixing that business. So we're now in a cycle where, we're back into the growth cycle. And hopefully this time learning the lessons from the past and making sure that, this time it's good sustainable growth. And I guess the real story behind Constantia is really the last 2 years and how we've set about, changing that picture in terms of the bottom line financial performance of the business off the back of that sort of rapid growth.
Awesome. Did I hear you saying that you joined in February 2020?
Correct. Yeah.
How was it to step into a company just before the world was about to completely change? And how did that impact how you approached business? I mean, you're heading into this exponential growth period, and it feels like the apocalypse is happening all around us. How was that?
Yeah, absolutely, Connie. I clearly didn't have the foresight in terms of what was about to happen. But at the time that I joined, the head count in the business had ballooned to almost 250 people in the business. And the first thing we had to do was to change that. We affected 40% of our staff in a 189 process. We ended up retrenching 25% of the staff in the business. That all rolled out as the first lockdown started. In fact, we were ready to issue the letters as the president announced that we would spend a week at home. Then when he came back at the end of that week and said we're going to spend another couple of weeks at home, we realized that we don't know how long this is going to take and we can't hold off the process any longer. And so we issued those letters. Now, doing any restructuring and retrenchment exercise, is tough for a business at any stage, but you can imagine at a time like that, it was doubly so. And so we ran that whole process remotely. But in hindsight, that actually was the catalyst for the turnaround in the business, because it allowed us to focus on the people. Through that process, we engaged everybody in the business, and we did a thorough process, and we did it, under the circumstances. I like to believe we did really well. And the measure for that is that we ran that whole process without a single CCMA matter, despite the fact that we were in that COVID scenario. So that really set the tone for doing things properly in the business. But through that, it just became clear that if we focused on the people and we listened to the people and we engaged effectively with our people, we'd be able to turn this business around. We didn't turn this business around through investing in fancy, expensive technology or launching, the next greatest product. It was really through the people. It was absolutely a people-driven turnaround of our business. So, today when we report performance, we start with the people metrics, because if we get the people metrics right in the business, the financial metrics will follow. And we've seen that play out in the business in the last 2 years.
Wow, that's awesome. Yeah, I think when you turn your focus to people, you create a kind of culture in the business, and from there, it just blossoms outward if you get that right. So yeah, that's amazing. I can't imagine how it must have felt walking into a new environment as all of this stuff was happening around us. It's crazy. But here we are 2 years later, and you guys are, gunning for a growth period. And I wanted to hear a little bit about, from both of you, Sean, you as well, what kind of vision do you have for this business moving forward? What's kind of your I don't know, do you have milestones in mind that you want to reach? Is there a share price that you're really aiming to get? What do you kind of see for yourself happening in the next 5 to 10 years?
Yeah, so I'll let Peter take the question first from the perspective of Constantia, and then I'm happy to round it out with the perspective of the listing and the share price and that.
Yeah. So I guess in terms of hard metrics, we obviously have goals and objectives. We're currently at just over 2 billion of gross written premium. We think we can comfortably double that and more in the next sort of three to 4 years. But a more simple vision, the way I look at it is, we're busy creating an environment, and my vision for that environment is to attract the best people in our industry. So I talk about, if I can get the best people in the industry under a single roof, that's what will drive the future performance of this business. So again, talking about the people metrics, we're very much a people-driven industry, especially the segment of the industry that we operate in. We work through intermediaries, so it's very much relationship-driven, and therefore the people are absolutely key to our story and will continue to be. So I look at the vision in very simple terms. How do I gather the best people in the industry under a single roof, empower them, make sure that we have a very clear, simple focus in terms of how we are going to succeed with those people. And we have a culture in our group, from Conduit down, which is not typical of a corporate organization. So that gives us a lot of flexibility as to how we organize ourselves, how we can put structures together to align incentives, and how we partner. So the success of Constantia over the years, and Constantia actually goes back to 1962, so it's been around a long time, and that success has always been through partnerships, and that's something that had lost a bit of focus over that growth period. And we just stepped back and said, we need to focus on those partnerships, and if we make our partners successful, then we will be successful by definition. So, if I gather the right partners, the right people under a single roof, those financial goals, the harder metrics, will be a shoo-in.
Nice. Sure.
Yeah, so I'll add there, Carly. I think Peter's hit the nail on the head in terms of the desire of the type of business that we're trying to build at Constantia. From Conduit's perspective, as the owner of the business, our job is quite simple, and that is to ensure that we create and allow the space for Peter and his people to deliver on the potential that they hold. Peter mentions that we are quite different from many other corporates, where we don't give Peter hard short-term targets that he has to meet. We let the people in the business decide effectively their own fate about how fast they want to grow the business, where they can grow it, how they can manage it. And I think if you look at most companies listed around the world, and those that have been very successful, there are certainly those kind of characteristics that are present in those companies. So from a shareholder perspective, what you want to do is own a company that has the right culture, led by the right people, with the right ability to compound its underlying value at a high rate for a long time. When we sit at Conduit, we're looking at the opportunity with Constantia for many, many years into the future. Peter's mentioned over 3 to 4 years, we think we could probably double the size of the company at attractive and acceptable profitability levels. But even then, I mean, if you think about it, let's say then we double it, we're about 4 billion. And the insurance premiums in South Africa today, including the life sector, is over 200 billion. So the runway for us is very, very long. The quality of the asset that we have is very, very high. The people in the business are exceptional. And so where the share price goes thereafter is going to be a reflection of that. So we are very, very confident and comfortable that over the long term, given the ingredients that Peter and his team bring to the table, we will see a lot of value created, not only for shareholders, but for all the stakeholders involved in this business.
I can just sense the energy of Kalo through the screen here, because he's a huge huge fan of small cap stocks and love sort of hearing projections and ideas of the future. Kaylo, I'm going to let you fire away with some questions because I know you're dying to.
Well, thank you so much for the opportunity. And once again, greetings to the panelists and the viewers as well. Not to dive too deep into this, but just to ask for Peter can you perhaps maybe give us an idea as to the what operations Constantia actually has and which countries it actually operates in?
Yeah, sure, Kayla. We are a multi-licensed insurance business, so we do everything from non-life to life. But within that, more importantly, the segments that we operate in include health. It's probably the biggest part of our business. We're not a medical scheme, so the health products that we provide operate sort of on either side of the medical scheme world. So either the top end where we provide gap cover, that's the difference between what a specialist would charge you and what medical schemes would pay. And then at the bottom end, for those who can't afford medical aids, we provide primary care products, which gives those individuals a degree of private health care, and also access to medication, etc. So, we fill those sort of gaps in the medical space, and we also have a medical business that operates in 19 African countries. That doesn't mean that we have bricks and mortar in those countries. We do have people in those countries, and we work through our partners in those countries where we have people, but we are providing healthcare solutions and insurance solutions in those countries. And then, for the rest of our business, which is all or mostly South African focused, we're very much in sort of specialist lines of business. So we have a medical malpractice business. We're the largest insurer of medical malpractice in the country. And then things like aviation, marine, construction guarantees, warranties. So you'll get the sort of theme is that where advice and complexity comes in, those are the areas we like to play, because again, businesses that are advice driven require that personal interaction and the giving of advice. And our business is very much geared towards supporting that advice. And then our life business is more focused on non-underwritten life type products. It's a smaller part of our business. So we typically do funeral type products, but also looking there to do more affinity and scheme type business. So we're not in the space where we compete against the big life houses that are doing the complex underwritten life products. The fact that we are a small business means that we have all of this, again, sitting under one roof, which means our ability to kind of package product and find innovative solutions is much easier. And again, that's also part of our culture, is breaking down silos and making sure that we have collaboration as a kind of key theme in the business that enables us to, I guess, take advantage of that diverse product range that we have.
Okay, now I think before I actually go to Sean, I think I'm actually going to be speaking to Peter for some time. But also, I was actually listening to you, and actually just to try rephrasing the name and make sure I get it right this time. Constantia, am I correct?
Correct.
Perfect. So yes, just to have an idea, because you mostly emphasizing on Africa. Now my question is Constantia actually looking into expanding far beyond Africa?
Not at this stage, no.
Oh, so you guys are not planning to expand far beyond Africa at the current moment? Because the one thing that I've actually had in mind is thinking on interest rates, right? We look at the fact that interest rates are actually going up a lot and all of that, more especially looking at inflation. How is it that the company is actually positioning itself during this time when interest rates are actually going up?
The insurance business is an interesting one, particularly the non-life business, because it tends to be quite resilient when it comes to economic cycles. And that's largely because people, tend to be risk averse. So they're quite reticent just to cancel an insurance policy. And, you just have to look at any recent disaster where people haven't had cover, and the financial impact of that, is massive. And those stories tend to make headlines, and that makes people, as I say, a bit more risk averse. At the same time, as you get inflation, asset values increase, and that, premiums are generally a rate on the value of your assets. So as those asset values increase, the premium in absolute terms also increases. So that sort of also creates a bit of a buffer and creates some of that resilience when it comes to, the cycles. So, that's why I'm a great proponent of the insurance industry, in terms of balancing out any portfolio from an investment perspective. To have that, I guess that balancing factor is great. But, we also, I guess digressing a little bit, but on the same theme, as an industry, we play a massive role in actually, driving economic growth. So, we spend as an industry in South Africa alone close to 70 billion on procuring claims and services every year, just in the non-life sector. So that's money that's being pumped back into the economy. And it's how that money is channeled, channeling that into small and medium enterprises will definitely be a key driver for growth in our economy. And it's something that gets overlooked because it's sort of lost in the bigger picture. And a lot of people don't kind of really connect the dots around that. That's something that I'm particularly sort of passionate about and vocal about in terms of how do we support that sector of our economy. And anybody who, and I've been in that space, running my own show for a while, and anybody who's ever been in a small enterprise will know trying to raise funding is the hardest part of setting up a business. The second hardest part is making sure that you have customers and business flow so that you can pay back the funders. And that's often where things also, fall apart. So, if you're lucky enough to get the funding, it's then being able to sustain the business and repay that funding. And I think we've got a huge role to play as an insurance industry in doing that. And that's often overlooked as well.
Yeah, if I may add there, Kayla, the reason why interest rates are going up is because inflation is going up. And inflation, as you know, as an equity investor, is generally bad for equities if you don't have the ability to reprice. So in insurance business, and particularly our business, where we are a niche operator in areas where we have a lot of market share or we have a lot of market knowledge, we tend to be able to price in accordance with or even ahead of inflation. So we have one of the most valuable tools in business, and that is pricing power. So as interest rates go up, it means inflation is probably going up, which means our premiums are probably going up. And we don't have the same on the cost side because the motor, for example, is a relatively small part of our book. So we're actually quite excited. Maybe excited is not the wrong word. It's not the right word. We're not excited about interest rates going up. We're well positioned as interest rates go up because of the nature of our business.
No, thank you. Actually, you both answered the question very clear. Just to pose a question to both of you guys, since it's two different companies, looking at acquisitions, you took, for example, when you look at penny stock investors, we love what we call acquisitions, mergers, and so forth, right? Now, looking at the two companies, is there perhaps maybe any future acquisitions or any sort of deals that the company has in place or planning to do that might actually create more value for investors in the short to long term?
Yeah, so I think from the perspective of the deployment of our capital, like where do we use our money? Do we reinvest in the business? Do we pay dividends? Do we repurchase shares? Do we make acquisitions? That is something that we think about very carefully and very clearly on a regular basis. We have just made one acquisition, which is a company called OracleMed, which used to be what's called a UMA, underwriting management agency of ours. So they would write on our behalf, and they do our medical evacuation across Africa, which is a fabulous business. It's all in US dollars, and that type of insurance is required for high-ranking executives or expats that are, for example, working on an oil field in Angola or something like that. So if something happens to you, you get airlifted out to Johannesburg or UK or whatever the case might be. And that business became available for us to acquire. And so we did acquire eventually a part to majority stake in that business. So what that means is that not only do we keep that business out of our competitors' hands, but we now own more of it, and therefore we start to equity account it and consolidate it, which means the earnings and the revenues and so on and the cash that we show in our income statement and balance sheet will increase, right? And so obviously, as you say, investors love M&A so long as it's productive, I would say. But I think it's also worth mentioning that the organic opportunities for us are so significant that to get to a doubling or so of the size of our business doesn't require any acquisitions. Anything that we would acquire would be on top of the growth rate in the business that we are already observing organically.
Yeah, Sean, maybe if I can just add to that, I think acquisition is always very difficult, right? Because you take a business and you add 1 + 1, you don't often get 2. It's easy to end up with 1.5, and especially in a business like ours, right, where people are a key component. And if you try and mash together different management structures and different cultures, there's often a fallout, from that. And then invariably you end up competing against half of the people who've now left the business, and that destroys value. And I think to Sean's point, the base that we're coming off and our ability to attract new partners, we think is immense, and we've seen traction with that. We recently announced a key partnership with Christelle Coleman, who's in my mind the leader when it comes to personal insurance in the market. And she's looking to set up her next venture. She's got a great track record in setting up these ventures. And she chose us out of a bunch of alternatives that she had. And so that talks volumes to our value proposition and what it is that we are looking to do differently, which is simple. Again, it's about our people and creating the right culture and environment to support partnerships. So we'll be partnering with her. But that becomes, like, in our world, becomes a sort of a light acquisition, because it's not a business where we have to now do a whole lot of integration, etc. It really becomes an add-on, and in many ways it will be seen, I guess, as a sort of organic growth in the business. But those type of transactions for us make a significant difference.
Okay, now Peter, thank you so much. I can ask you more questions. I mean, I have time to bring the questions.
Hello.
But Sippy, I don't stop with penny stocks.
I know. So we actually do have a few questions that have come through from our community. So I think if you can maybe just give it one more question, and then we'll switch over and we'll start taking a few from the community.
Okay, perfect. Just to ask Sean the last question, I mean, since it's the listed company, when it comes to dividends, we want dividends. So question is, can we expect dividends at any point in time for us as small masters, penny stock investors? Can we expect dividends within the short to long term? Is there perhaps maybe like a possibility for dividends to be paid out at any point in time?
Yeah. There certainly is a possibility, and I would say a probability as the business grows. But we always think of the use of the shareholders' capital as what's the best outcome, right? So we might say, okay, we could pay a dividend that everybody could get, let's say, 5 cents a share as an example, right? Or we could say, well, if we keep that money and we reinvest it in the business, we could accelerate the growth rate of the business. So then we say, okay, instead of giving 5 cents a share, the value of your investment increased 100%, right? And so we look at that equation and that trade-off, and we say, what is going to be ultimately in the best interest of our shareholders? Certainly, given the rapid pace that we are growing and the opportunities that we have in the market, we don't think there's going to be a dividend in the short to medium term. But we think in exchange, shareholders are going to benefit from the increase in the share price, which we think could be quite dramatic, given how low it is relative to the underlying value of the business. And of course, we think about things like share buybacks or acquisitions or any of those capital deployment activities from that same lens. What is going to ultimately result in the best return for shareholders? And as you know, it's not always dividends, but sometimes it is. And so, when it is, we will absolutely strongly consider paying dividends. But I think as our returns on capital and our growth opportunities are high right now, and we need to support those with the capital that we do generate.
Okay, Sean and Peter, thank you so much. Carly, I think you better take the mic away from me, because I kid you not, I'm not going to stop. But once again, thank you guys. Okay,
I'm taking the mic. Okay, we've got a couple of questions that we can go through. I think we've got time for one or two. You'll have to just excuse me. There's some very long words that I'm seeing here, so I'm going to do my best. Okay, this question is, as noted by management, the entity is thinly capitalized and the Prudential Authority has taken note of the statutory solvency capital ratio. I get 10 points for that. Being below the minimum level of 1 for the insurance entities. What are the management's prospect and plans as it relates to recapitalization, considering right issue or an injection from current parent?
Right.
You guys could make sense of that.
Yeah, we absolutely know what's being talked about, but I feel your pain because before I got involved in insurance, I had absolutely no idea what that question would relate to either. But the question refers to the fact that Constantia at this stage, and we've been very public about it, doesn't have sufficient capital to meet its growth aspirations. And so we need to do a transaction to recapitalize the business in order to get to where we need to go. And so we have been exploring, and there are some announcements in this regard regarding our intention to recapitalize the business with a third-party investor or investors. And all I can say further at this point is keep close, watch what's going to happen, because we think it's going to be particularly exciting. Peter, anything to add on that?
Well, yeah, for those who are not familiar with the term, but the statutory capital, I guess, is a bit like your capital adequacy for a bank. It's just it's the same metric for an insurance business. So it's regulatory capital that we require to meet the regulators' requirements. But as a business, we in our performance, we're generating cash in the business, which is a great positive. So I guess our cash levels and our cash generation is at record levels, but to grow ourselves out of the sort of or grow ourselves into the regulatory requirements will be too long a runway. So hence the need to do the transaction, details of which have been announced on SENS in the past. So those processes are ongoing.
Okay. The next question, I think there's sort of two questions that came through with a similar theme. My question is, Conduits / Constantia has not been profitable in the last 2 years or results period. When do you expect the turnaround strategy to actually yield a profit, not just an underwriting profit?
Sure, Peter, you want to take that one?
Yeah, from a Constantia perspective, our business is pretty close to break even on a sort of operating level. When you look at most insurance companies, a big sort of driver of the ultimate profit in the business is the investment portfolio and how that excess capital or how that regulatory capital is invested to generate a return. So obviously for us, that's the previous point we were talking about. Once our capital is restored and we start generating returns on that, it'll help us. But at the same time, we've been negatively impacted because a lot of the capital that we sit within the business is in the form of equities that have taken a knock in terms of market-to-market valuation. So unrealized losses from that ultimately impact the bottom line. So we tend to look at different metrics. As I mentioned, the cash earlier, that's obviously a key metric for us. The fact that we are generating positive excess cash, is a good lead indicator in terms of the business performance. And then obviously the underwriting profit for us is critical. So 2019 business made an underwriting loss, and since then we've consistently generated every month underwriting profits. So the profitability again on current run rates will likely exceed what we did last year. So as we continue on that trajectory, that picture will turn around, and then with the capital injection, it will obviously be a very different looking story.
Okay.
I don't know if you want to add anything.
Yeah. Is there anything else you want to add there?
No, I think we covered it.
Okay. Then we've got two questions here, or a bundle of questions, but I'll just try and fire them off at once. We are getting asked, what is the business case for an investor to invest? What are the typical time horizons, and what are the key risks to an investor? If we start there with those.
Yeah, so look, I think the business case to invest ultimately has to be in the idea that what you put out for investment now, you'll have more in value later into the future. And investors have a wide opportunity set of what to invest in, but they don't always have a wide opportunity set when it comes to underlyingly high quality recurring revenue businesses that are generating profits, generating cash, that are available in the market at a price that, in our view, doesn't reflect the underlying value of the company. And the best investors in the world look for situations where there is an anomaly between what the company is reasonably worth and what it's trading for in the market. And I think based on my experience, it's one thing to buy a company that, let's say, is worth 100 Rand a share at 50 Rand a share, and wait out the time and make your double, let's say, in 2 years or 3 years. It's another thing to find a situation where a company is worth 100 Rand a share, it's trading at 50 Rand a share, but the 100 Rand is going to increase at a high rate over time because of the quality of the business. And that's kind of where we are with the business of Constantia. We have a unique opportunity in the insurance market in South Africa in areas that are not very highly competitive, where we have a competitive advantage, and where we're still very, very small relative to the opportunity set in that market. For example, in the medical malpractice space, we're only about 5% of medical professionals in South Africa, and that's a significant business for us already. So the growth opportunities is very, very attractive. The time horizons, it's impossible for me to predict how the share price will perform, and if I knew that, I'd be like Kayla, I'd be a trillionaire. But I'm not but I can tell you I'm not a trillionaire, so I don't know how our stocks will perform in the future, other than to say that over long time periods, they tend to map the evolution and the value created in the underlying business. And so we come back to the question of business and business value, and whether or not the business of Constantia is able and capable of generating higher and higher returns going forward. And I think we've touched a little bit on that in this webinar.
Yeah.
John, I'm surprised you didn't mention Warren Buffett.
Right.
We love Buffett.
Yeah. So Warren Buffett is obviously a hero to many people, and has produced a roadmap and lots of lessons for all types of investors, whether they be small cap, large cap, whatever it might be. And what we try to do is learn from people like Buffett and Berkshire and other insurance companies that have been very successful deploying this type of model. Fairfax is another one, if you're familiar with them, out in Canada, and if you're not, you should look them up. Where you are able to utilize the insurance platform to create more and more capital for investment and more capital for reinvestment, which eventually leads to being able to create a lot of capital for dividends and buybacks and things like that, because of the unique characteristics of the insurance business. So our business is different to an import-export business or a retailer or something like that. We have recurring revenues. We have, to a very large extent, predictability in our cost base and our claims and so on. And we have our operating expenses very firmly under our control. So it's not an easy business by any stretch of the imagination, but it's a very high quality business if you can get it right. And we've demonstrated since February 2020 that we can indeed get it right. So I think over the next few years, and certainly over the next 10 or more years, we're more confident now about the future of Conduit and the ability for the company to reward shareholders than probably we have ever been in the course of certainly my 12-year association with the group.
Great. We'll take this last question before we wrap up. What assets sit within Conduit Capital stable? What is the current discount to NAV?
So good question. So Conduit is the JSE listed investment holding company, and it owns the business of Constantia 100%. Constantia itself is about 3 different insurance businesses. All together, we just refer to them as Constantia. It was what Peter was talking about earlier, and one of our key advantages is that we can write any type of insurance in South Africa. We have the licenses and or the exemptions to do so, which is unique. Not many other insurers can do that. Some of our biggest competitors on the medical aid side are not able to offer product in the primary health segment, as an example. So that's a huge opportunity for us. We do have 2 other investments in the Conduit stable that only represent about 5% of our assets. Those are the master franchise of the Century 21 real estate brokerage business, which is kind of like a CEIF or a Pam Golding, where we own just the license and the IP, and we have about 49, it's actually about 54 franchisees today across South Africa that are performing exceptionally well. That business had record revenues and profits in 2021, and so far in 2022 has matched that year, which has been quite exceptional. It has a return on equity of about 66 or 67%, which is very, very high. A good company tends to have a high return on equity, so we're quite proud of that. And the growth opportunity is high. 54 franchises across South Africa is low. So there are many territories where we can grow into, and I think we will grow into, generating a lot of cash for the business. And then the second investment we have is the residual investment in what's called Africa Special Opportunities Capital Fund 1, which was a fund that we invested in that goes out and buys distressed companies, fixes them up and sells them. One of the biggest successes they've had is with the Skynet business. If you've ever delivered anything hand-to-hand or couriered in South Africa, you probably came across Skynet at some point. They bought that business, fixed it up and sold it for a very tidy return, and we generated a cash return from that. They have 2 other assets that we expect will realize in the calendar 2022 year, and that will result in further inflows into Conduit. And then at Conduit, we have about 40 million Rand in cash that we have available to invest or available to effectively work down our waterfall that we talked earlier about dividends or buybacks or acquisitions or reinvestment or such. And so there are other assets outside of Conduit, and there are attractive assets, but the main asset that we have and the main engine that we have to grow the value of our business is the business of Constantia.
Great, guys. Well, thank you so much for joining us today and sharing those pearls of wisdom. It's always awesome to hear your origin story, and I really look forward to carrying on being a member of the audience to your story as you grow and fulfill all these aspirations that you've got. Kaylo, thanks so much for your input, and everybody who joined us today, a big, big thanks. It's awesome to be able to connect CEOs with shareholders in a way that you can interact and engage. So thank you guys so much for joining us.
Great. Thank you, Carly, and thank you, Kayla. We've enjoyed it, and thank you, everybody, for your questions and for participating, and we hope to see you again soon.
Cheers, everyone.